transparency of reference rates. You have SIBOR, the SOR, and the CPF-OA packed interest rates among the banks. The SIBOR basically means Singapore Interbank Offer Rate. The SOR basically means the swap offer rate. Translated to an equation, the swap equals to the SIBOR plus reserve cost. Who down here very good in mathematics? Oh, no show of hands, cannot be. I think too shy, too modest. Yeah? Some of those who are very good in mathematics will probably tell me crazy, it doesn't make sense. How can the SOR be equal to SIBOR plus reserve cost when the SOR currently is lower than the SIBOR? Whoever told you that the bank's reserve cost cannot be negative? The banks now have a huge deposit with them, but there's not much lending out there, right? So when you deposit to the bank, what do we have to pay you? Interest, right? But if you don't borrow the money from us, can we charge you interest? We can't. So we are paying out interest but not gaining anything for that interest. Right? That's why our reserve cost is currently negative. Non-transparent rates. CPF-OA I don't have to explain. CPF board is not here today, but CPF-OA, CPF rates are actually pegged to the average bank savings, fixed deposit and current account rates. There is a statutory floor at 2.5%. Right? There's a statutory floor at 2.5, even though the average bank savings, current and fixed deposit rates are way below 2.5 currently. But somehow or other, this rate has been very, very stable over the last 15 years. Categories of packages, summary. This is all we have covered today. SIBOR and SOR interest rates. Oh, I was just covering that just now. The SIBOR, the SOR, CPF ordinary account rate, board rate. What does board rate mean? The banks, when you go to the banks and you ask them, what is your board rate? Oh, 4.25, 5.75, 6.0. What does that mean? Basically, it is the bank's internal cost of funds. It's basically just the bank's internal cost of funds. If you ever try, and some people have tried asking the bank, how do you determine your board rate? No bank can ever give you that equation. Huh? No bank can ever give you that equation. Any other reference rates? Now we are very smart. Because of that, it was deemed that board rates are not very transparent, which resulted in a lot of public hoo-ha. So no one wanted board rates. So what did the banks do? They come up with special mortgage rate, special lending rate, special mortgage lending rate, special rate. A lot of funny other terms came out, right, which previously we had never heard of in the banks. But basically they are all bank determined. So if you want transparency, please stay clear of board rates. But there is a benefit for board rates. It normally lags behind market rate. So which means SIBOR and SOR moves up first. Board rates don't move that fast. It normally takes 3 to 4 adjustments in SIBOR and SOR before your board rate moves. So it is a little bit more consistent than the SIBOR and the SOR. Right? It is a little bit more consistent. But there is a premium, again I say, to that consistency. Transparency. SIBOR and SOR packages are available, quotes in your business times. Internet, I think I can forget about all these printed papers nowadays. It's all in the internet. Go to Reuters or Bloomberg's website and you will be able to see your SIBOR and your SOR rates. CPF rates, go to CPF website. Yeah? Choosing a package, what are the things to take note of? First and foremost, the interest rates. Yeah? I'm sure for those of, since you're all house hunting, you must have seen advertisements. This is a very, very strange thing. A lot of people who are not house hunting will never see advertisements on packages, on mortgage packages, or if you don't have an existing loan. But if you're house hunting or you have an existing loan, such advertisements becomes very glaring in the newspapers or in the internet. Right? Especially when it says 0% for the first 1 year. Take a 0% package for an EC for an example. For the next 1 year, any disbursements, by the way, any payments to the developer may not be. Very likely no. Right? So what the banks officially give you? 0% or nothing. Correct? So be careful. Look at the effective interest rate to you and not the published rates alone. 0% very attractive for how long? My next question. Yeah? And some may be so creative to come up 0% for the first 10,000. When you take a loan of 1 million, what is 0% on 10,000? And thereafter they charge you 5% on the rest of the 10,000. Oh, sorry, of the 1 million. Lock-in periods. Nothing comes for free in this world. Nothing comes for free in Singapore. Nothing comes for free from the banks either. There's always a catch. When I give you a deal that is too good to refuse, I normally require your loyalty. Because over time, then I can recoup whatever I've given to you. If you do not stay with me long enough, I cannot recover the cost I had incurred. Correct? So because of that, the banks would normally impose a lock-in period for such packages. The lock-in doesn't mean you cannot exit. You can, but you have to pay a penalty to exit. Right? And that's how we recover the cost. Cancellation fees, some people may say, but I haven't started borrowing. I signed your package. I haven't started borrowing, so you cannot charge me a penalty. All-encompassing clause. Lock-in period for the loan that has been disbursed. Cancellation fee for the loan that you do not want anymore. Correct? You signed, but at the end you didn't pay. You still pay us a cancellation fee. Why? We had to do a lot of administration. People like me had to go and see you umpteen times in your house or at the coffee shop, buying you coffee, mocha. We have to recover our costs. Clawback of subsidies. Don't be too happy when the banks, when they compete amongst one another, they can be very, very aggressive. And they will tell you, give you 3 years fire insurance. The other bank say, no, I want your deal. 5 years fire insurance. Free. Yeah? Then another bank comes out. Oh, okay. Your legal cost how much? The other bank give you 2,000 subsidy. I give you 5,000 subsidy. Legal cost, by the way, probably about 2,500 to 3,000 only. Huh? But they give you 5,000 legal subsidy. Bear in mind the terms and conditions of all these subsidies. Because what they give you, they can take back. They will impose, again, a loyalty period. If you do not stay with the bank for more than a certain period, you may have to pay all these subsidies back. Right? Other freebies, conditions, restrictions. Coffee maker, breakfast set, Wi-Fi, home theater system, probably 1,000 or less, all this. But nowadays, ingenious. iPad 2. Very attractive. How much? 1,000. Don't forget there's this 16 gig non-3G. Wi-Fi only. Less than 1,000. Correct? But because of that, if you sign up your package, don't forget, you enjoy that 1,000. So what if it is 1,000, 2,000? You took a loan of 100,000. You have to pay the interest. 1%, for example, of 100,000 is 1,000 per annum for the next 35 years. Even at straight line, simple mathematics, 35,000. Correct? Does it make sense? iPad 2. Buy yourself. Better can buy 35 iPads. One in the toilet, one in the living room, one in the balcony, one in the hall. Wherever you want to put 35, up to 35. Don't buy more than 35, yeah? Doesn't make economical sense anymore. Use of CPF funds, I will only go through very briefly because I cannot represent CPF here. This can all be found in your CPF website, www.cpf.sg. When you buy new flats from HDBs, you have 100% of valuation limit if you take a bank loan. But if you take the HDB loans, you're not subjected to any limits. You can continue to use the CPF funds to pay for this HDB loan throughout the lifetime of that HDB loan. Of course, subjected to availability of funds in your CPF board. But as far as the bank is concerned, or rather as far as CPF is concerned, when you take a bank loan, you are subjected to a limit. Yeah, 100% is the valuation limit. There is another withdrawal limit which can extend beyond this 100%, but provided you have kept the cash component of the minimum sum scheme in your CPF retirement account or your ordinary account. Right? For more details on this, please check with the CPF and the CPF website. Right? Very interesting part now. Eligibility criteria on bank loans may be easier and more simple than the HDB's one. Age 21, 70. Legal age to contract in Singapore 21. Yeah, HDB allows you to buy when you're below 21, occupier, right? You're not owner of the property. So don't try to come to the bank and say, hey, my children 18 also can also sign loan with the bank now. Oh, cannot, sorry. The bank will not allow you to contract. Minimum age 21, right? Maximum age 70. Do you hope to be working at the age of 70? I hope you don't come to the bank and apply for a loan at the age of 70. Yeah? Hopefully, if you're speculating in property, you're going to use your own cash. Why? CPF would have been withdrawn by then. Yes? Nationality. Singaporean and SPR. Which includes everybody here, right? Any foreigners, non-SPR, non-Singaporean? Any show of hands? No one, because you shouldn't be in this room. Minimum income requirement, 1,500. Hey, I qualify. Don't go and buy a $1 million property now, please. Minimum qualification to apply for a bank loan at certain banks even. But it doesn't mean the same bank is going to give you 1 million loan. Yeah, it depends on your servicing ability. Remember the recommendation from ABS? 35% of your income towards your monthly commitments. If you already bought a Ferrari, sorry, cannot afford anymore. Debt to income ratio, comfortable, 35. And your financial history, cleaner. Don't take what? I think there's one POSB home loan assist. There is some cash Citibank ready credit. Take, and then don't pay. Shopping spree. Great Singapore sale. I support the Singapore economy, the Singapore GSS. Yeah? Spend. After that, cannot afford to pay. Then the bank restructure your loan. Oh, you took 5,000 credit limit, you spend all on one weekend, at the end you can't afford to pay monthly installments, they change it to you, okay? Term loan, $5,000. Every month you pay us back $500 for the next 10 months, plus interest. Correct? Restructured loan does not mean your credit is clean. It had been restructured before. It means you are not financially savvy. Yeah, it means you did not fulfill your financial obligations. That's why the bank had to restructure for you. So do be careful. Here you have to be clean, because now we are not talking about $5,000 loan. When you buy a property, minimally you're looking at $100,000 loan. Right? So I'm not going to risk that $100,000 on you if you have your $5,000 restructured. Be careful. But the good thing about it, the banks do have a heart. Some people go into business, they go into bankruptcy because of the business failure, because the economy went bad, so on and so forth. As long as you have fulfilled your financial commitments, you paid back everything, you became a discharged bankrupt, the banks will still consider granting you the loans. Yes? If they don't, go and look for another bank. Other things to note, my final slide for you. Maximum loan of 60%. Take note, the MAS regulation revision lately, some of you, if you get scared, don't worry. If you are here and you were meant to be here because you're a first-time home buyer, you're not affected by the MAS latest regulation changes, because it only affects the second loan, not the first loan, right? So maximum loan, 60% if this is not your first loan. I believe all of you will be first loan. Seller stamp duty, like I said, when you speculate, even if you're selling your HDB, within 5 years, you're subjected to within 4 years, you're subjected to a 16% stamp duty on a prorated basis. Yeah? Basically 16% if you sell within the first year, 12% when you sell on the second, so on and so forth. Right? Monthly installment increases when interest rates increases or when banks' cost of funds increases. Please bear this in mind. You are probably buying properties now when interest rates are at its all-time low. Ask the bank, please, or the banker, to project for you at an average historical rate of probably between 3 to 5% to determine if you're comfortable with that monthly installment. Interest rates now are approximately 1+%, sometimes even lower. Don't assume you're going to live with this 1% for the rest of your, for example, 35 years old. Sooner or later, the rates will go up. Right? When you buy a HDB property, my recommendation, please, first-time homeowners, please buy your HDB property. It's a privilege. Singaporeans, buy. Buy first. Don't buy private. Now, the parents want to sponsor you with the cash deposit to buy private. Tell them, no need. Wait. Buy your HDB first. Why? Once you buy your private, you cannot buy the HDB. The subsidized, the heavily subsidized home. Buy your HDB first. Take your privilege as a Singaporean. Take the HDB loans before you go to the banks. Yeah? Don't forget, you can use your CPF as much as you want towards your purchase of your property, but do bear in mind that the reason, the purpose of your CPF actually was for your retirement. Looking at your ages here, I think all of you will tell me, 30, 40, 50 years later, right? Probably in 50 years down the road, then you will come and say, I should have listened to Martin. Use all your CPF. By the time you retire, Not a single cent left. Only way to cash out, sell the property. Then what? Sleep in the void deck. In Singapore, criminal offence, huh? Not just not comfortable. So please buy within your means. Thank you.